What's up everyone, Brad here with the Money Dad channel. In this video I'm talking about Kirkland's, yes, the retail store. Stock ticker is KIRK, because there is an amazing pattern shaping up on this stock chart. But I also want to start with the fundamentals, the financials, because they look absolutely amazing on this company right now, and I think that is going to be the catalyst for the move to the upside that this pattern on this stock chart is suggesting. So let's jump right in. Let's not waste any time on this one. I've got the pattern pulled up on the screen right now. I will go over what it is, the profitability potential, the accuracy, your stop loss, your target, all that stuff. I'm going to go over all that, but first I want to talk about the financials and the fundamentals, because that is it's really it surprised me. So let me start by saying how I found this stock. I found this stock by searching for the biggest movers in 2020. Like what stock, had the most gains in 2020. Basically, I was searching for that, and this was on the list because this stock in the March of 2020, the lows, the stock market lows in March of 2020, this stock was all the way down in that 50 to 60 cent range. It is now trading at $33. So was that 60 times your money? 60 times, right? So what is that, 6,000% gain or something like that over the last year? So that's, that was clearly at the top of, or near the top of that leaderboard that I was looking for. So that is how I came across this stock. So I found it for that reason. I stuck around for a couple of other reasons. The first thing, me being a chart guy, if you've been a subscriber for this on this channel for a while, I'm a chart guy, first and foremost. Stuck around because of this pattern that's shaping up, and I've been waiting. I've had this stock on my list for over a week now, probably 2 weeks or something like that. I've been waiting for this breakout right here, and we finally got it, so we're going to get into that. But while I was preparing for this video, I was looking at the financials, and I see why now this stock has had an insane run over the last year. These financials look fantastic. I mean, some of the best financials for a retail store I've seen in a long time. Well, let me rephrase by saying it makes sense why this stock was 50 cents and why it is now $33 when you look at these financials. And it also makes sense, these financials suggest that this stock is going to just keep ripping to the upside. So let me show you this quick little snapshot in TradingView. And by the way, guys, if you don't have a TradingView account yet, use my link below. It is a referral link. I'll get a couple of TradingView coins. It's not like real money, but I can buy subscriptions to TradingView and stuff like that. But use my link below. It's totally free, and it is an awesome charting tool. Not just charts either. I mean, you got financials and all kinds of. There's a whole community. I've got videos about it. Check them out. I got videos on TradingView in the description below if you want to look into that. Okay, enough of that. Anyway, a little snapshot of the financials down here. Look, guys, in 2017. $600 million in revenue and basically no profits, right? 0% profit margin. 2018, 0% profit margin. 2019, negative 9%, right? They lost a lot of money and their revenue is declining, right? This company was going down the drain. It was not looking good. In 2020, they continued to lose revenue, but they flipped back to positive profitability. Positive, that's not a word. Positive, net income profitability. Now, let's jump down into the quarterlies so that we can take a closer look at what has happened over the last year. Now that we have kind of a snapshot of the last 4 years, you jump down into the quarterlies and look at these bars going straight up. Remember how I was saying, like, in the past, I think it was 2017, 2018, they were just basically flat, no profitability at all, not terribly negative or positive. 2019, they were very negative, right? They lost a lot of money. 2020, they flipped positive, and here's why. In quarter one, 2020, negative 9% profit margin. Lost a lot of money, right? Quarter two, negative 7%. Did a little bit better, but still lost a lot of money. Quarter three, 8% profit margin. Huge difference. And while this is happening, they're increasing their revenue, right? This blue line right here, these blue lines are the revenue. These little green lines are the profitability. Okay, so you can see underneath it's negative, negative, flips positive, big difference right there. And then this last quarter, quarter four 2020, not only has revenue shot up again to nearly $200 million in the quarter, but profit margin is now over 10%. So that's on pace for an $800 million revenue year with $80 million in net income, which, you know, they have not had. I don't know if they've ever had that. They've at least not had that in the last 4 years. So these financials are amazing. Now think of a company that is on pace for $800 million in revenue and $80 million in net income with a 10% profitability, and they're growing, continuing to grow. And now look at this market cap. $472 million market cap. For that amount of revenue, that is a small market cap, which means there is a lot of room to run for this company. It makes sense, in my opinion, that this company is going to keep ripping higher. This price to earnings ratio of 31 is not the best, but that's because they're still working on that profitability, that 10% profit margin, in my opinion. If they are, you know, switching from being a brick and mortar store to mostly online, then those profit margins are going to keep going up and up and up. You will see this PE ratio right here come down as their earnings go up. So that will start to look a lot better, and the market cap will go up as the price of the stock goes up. So I think this is a fantastic looking company. As you know, as long as they keep pushing to move online, improve their sales online, things like that. So I think that's going to be the catalyst for this move. Now let's jump into this stock chart. This is an ascending triangle, great looking ascending triangle in my opinion, and we have a breakout, right? And we have the breakout on big volume. That is really good. Let me show you an ideal ascending triangle. This is kind of the what we're looking at here. The price action comes up and bounces and just kind of consolidates really tightly. There's a flat top line and there's an ascending support line, right? So you're breaking through this top resistance, which is a flat horizontal line. All right, look at this. We got this flat. It's not perfect, but it's pretty close. Flat horizontal resistance line above, ascending support line. Looks really good. Breakout on big volume. That is very important. A lot of traders don't, you know, they miss that, or they don't notice the volume, or they discount the volume. They think, it's not a big deal. That is a big deal. Okay, so we have the breakout. So we're looking for a price target now. We also want to watch for, be careful of a pullback. And I would say we need to have a lot of caution here. I'm cautioning you guys because of this wick on top of this candlestick right here. That is a bearish sign. It's not a good sign. It suggests, you know, what that means is like the price action today, these are daily candlesticks. So this candlestick right here represents today's trading. This wick means that the price at one point during the day got all the way up to the top of this wick, but then we closed down here. So there was some sell-off. So that suggests it's a bearish look. It suggests we might start to head down, or we might have a down day tomorrow. We might continue that sell-off tomorrow. You know, it's no guarantee. Nothing in the stock market is guaranteed. Nothing's 100%. It's the stock market, you know. But it's a suggestion based on, you know, candlesticks. So I want to caution you guys, be careful. over the next couple of days that we don't come down and break under this blue line again. If we break underneath this support, because now that we're above it, it's support. But if we break down underneath it, then this trade is no good anymore. It's busted. We need to sell out or sell out. Hopefully you have a stop loss in place, and I was going to go over that. That's where I would set my stop loss, is just under this blue line. So probably, $30 is probably too low, but I would say $30.50 probably. Save yourself 50 cents per share. You could make it even tighter than that if you wanted to and go like 30.75 or 30.90, but that's too close to the blue line in my opinion. You could get stopped out and then it reverse and then head to the upside, and you miss out on the, you miss the train kind of thing. So I'd probably set the stop loss at 30.50, just to give yourself a little bit of wiggle room. So that is, $2.50 to the downside on a $33 stock. It's a little less than 10% downside risk if you get stopped out. Okay, now what is the profitability potential? That's going to determine, what the risk reward here is. Now that we know we have a little bit less than 10% downside risk, let's figure out what the upside reward potential is. So we measure the height of this channel from the first touchdown. This is how I like to do it. It's more of it's a more conservative measurement. We get about $9, the width of this ascending triangle, right? Yeah, you can see right here, this is how they do it. They measure from the bottom of the triangle to the top, and then you add that to the top right here. Okay? So you measure from the bottom to the top. We got $9. We add it to the top where our breakout is right here. So you get your little ruler, you grab where we broke out, boom, you measure up $9. Right, because we measured $9. Boom, right about there, and you get $40.40. I didn't hit it quite perfect, so it's $40.40, 40.40. Okay, so this stock is currently trading at $33. So we're talking about $7 of upside on a $33 stock. It's late at night, my brain's not working, so let's just pull out the calculator and do 7 divided by 33. What do we get? 21% upside. Okay, so you have 21% upside. You have a little bit less than 10% downside risk. So that's about a 2-to-1 risk-reward ratio on this trade. Not bad. It's not the greatest risk-reward ratio I've ever seen on a trade before, but that's certainly not bad. That's, I would do that in my books, and I do plan to get into this trade. I'll probably wait and see, what it looks like tomorrow because of that big wick on top of that candlestick right there. It does worry me a little bit, so I want to see, what the price action is tomorrow, see if we're going to sell off. If we do sell off, then I'll continue to wait and see if we're going to break below this blue line or not. So, do what you want with this information, guys. I'm not a financial advisor. This is just my opinions for entertainment purposes only. All that. I'm just letting you know what I'm going to do with my money. I'm going to wait a little bit just because of that big wick. I'm not sure what's going on here. If we head up from here tomorrow, then I will buy in. That's probably what I'm going to do. And like I said, I think the catalyst here is, well, they don't have an earnings call anytime soon, so it's not like we're going to get some new big information that suggests this company is incredibly more profitable than it was yesterday or anything like that. But I think that is the reason why this stock has been going higher. And I think that's the reason why it will continue to go higher. This is just the pattern on the chart that, that's the reason for the chart moving up. Whereas you have, your fundamental analysts, the financials is the reason for the price moving up, right? Two different reasons for the same thing, okay? So that's what I have, guys. I hope you all enjoyed it. If you stuck around this long and you haven't hit that like button, please do it for me now. Helps out my channel and, the algorithm, I guess, the YouTube algorithm. So, and if you're not a subscriber yet, please hit that subscribe button. That does help me out as well, and you get to see more videos like this if this is your thing, okay? So that's what I got for this video, guys. Hope you enjoyed it. I will see you in the next one.